Hello, Maverick traders, and welcome out to your weekly currency room. This is Sankit here, and I'll be breaking down this week's price action and most importantly, prepare ourselves for the upcoming week ahead. Let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what's going in the markets, what the currency basket is telling us, what the news is telling us, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So going into this week, again, a very volatile week. And again, traders who haven't really experienced volatility, this is again a great example of where, you get that volatility, you get that back and forth. And, there's a lot of opportunities to be had in that environment. But at the same time, it's a very quick moving market. So, so we can go from a bullish to bearish very quickly. So again, this is an environment that is good to get in and get out. But as far as the a long strategy goes, where you're holding a position, looking for a trend, not a great week. But we just take a look at the overall market. This was again a roller coaster week where, we had that about 3%, 2.5%, 3% range in the S&P. And it all started on Sunday night to Monday morning. We had a massive gap lower. And again, that all started with this DeepSeek AI, the threat out of China. So that really caused a stir in the markets, but market really settled down. And then here we are going to Friday. We are one day from that tariff threat for Mexico and Canada. So in the last hour, we are still getting this conflicting reports. Earlier in the day, markets were looking great. And then we got the news that the tariffs will be going in March. So, that gave a breathing rally in the markets. And then here we are just, shortly after, we got the news that, nope, that reported false. And the tariff's supposed to go effect on February 1st. So who knows what's going to happen? But as you can see that this headlines and this environment, it's fluctuating quite a bit back and forth. So volatility is really the name of the game here. And once we have this behind us, I think it will be much smoother sort of a path ahead. But until then, I think markets is likely to be, on his heels here and just trying to figure out which way it's going to go. Again, great opportunities for shorter term, but not so great when you're trying to look for a trend. As we take a look at the dollar is kind of holding steady, and then the yields did pull back. So, dollar has been in an uptrend since October. So we definitely seen the dollar kind of stalling here a little bit, but we are seeing that range that it continues to go back and forth. We get a good news, dollar pulls back, we get about the tariff news and the dollar goes up. So we're just getting that back and forth. This is what we call a range bound price action where, we have a defined support level, defined resistance level, and we're just bouncing back and forth in there. And then lastly, we had the two central banks out of the way this week. That was Bank of Canada. They cut rates by 25 basis points. That was as expected. And we also had the FOMC that held rates steady. Again, none of these news caused a big stir in the markets. I think the underlying pinning is really on, what the broader markets are doing. So risk on or risk off. And then secondly, these tariffs that are causing a lot of stir as well. So until that's resolved, expect this to continue. And again, we are, we'll see what happens. Again, does those tariffs go into effect tomorrow? I mean, that's how it looks like. And, who knows? I'm recording this class before the close, and who knows? We get something from now until tomorrow. But this is where we are. And as a trader, you have to kind of understand the market condition and then realize, is this a market where I want to be exposed, or is this a market where, I don't like the uncertainty, so I want to be on the sidelines? This is where it's important to know where you're in, because volatility can work both ways. Volatility works great. You can really propel your trade in the short term, but at the same time, it can really, cause those, back and forth where you're just taking losses here and there, despite of whatever you're doing, because, we are seeing good long trades and short trades throughout the week. We had big moves on both sides. So those are the investing environment that we are in here. Now, when we talk about this week's numbers, I'll just take a glance at it. But like I said, it was not, the numbers didn't really cause a big move. Here we are, Aussie CPI, that was lower than expectation. We did see Aussie dip on that. But again, I think Aussie has been moving a lot on the broader market sentiment. So risk on versus risk off. We have this Bank of Canada that's out of the way. So now, again, Bank of Canada is now sitting at about, getting down to, again, quite a bit of divergence between, certain currencies. CAD has been definitely one of those most aggressive in as far as the rate cut goes. So that's where we are. But outside of that, we have the advanced GDP number out of the US. That caused definitely small moves here and there. But again, I think even the PCE price index today didn't really cause a big move. What caused a big move is when we hear about the tariffs, and that changes the market sentiment quite drastically. So let's just take a look at last week reviews and take a look at the numbers. And these numbers, again, like I said, are subject to change depending on how the market's going to close. I'm recording this before the market closed, but anything can change in the next hour. So looking at the numbers here, S&P down 1%, VT down 0.62, crypto bounced up, but again, that crypto move was mostly thanks to the Litecoin. Litecoin had a big move, but outside of that, not so much. Gold steadily moving higher, and oil did pull back. So let's just take a look at the markets here. So I just want everyone to highlight that here we are by the end of the month. We have a whole January under our belt. And the theme of January was this, as you can see in this chart. This is, this is quite a range on the broader markets. So we had, risk on, we had risk off, a lot of moves, and then, a big risk on move. We got a big risk off move here, a risk on, and then take a look at Friday. We got it last Friday, we got a pullback here, and then here we are. We did break out. You can see that we were looking pretty good. And as soon as that tariff news came out, and just brought the markets down. So this is what you've been dealing with all month. And this is quite different from, December and November. And what changed, the market environment changed. Under the new administration, we expect more volatility driven by headlines. So that's just the market environment you're in. But, this is why we always say use the right strategy for that environment. This has been a great environment for a shorter term strategy versus longer term strategies. Now, when you take a look at the numbers here, you can see that overall, if I just, kind of blows over this volatility, it was a good solid week. Take a look at yen. Yen is up 1.66%, so nice move here. Dollar up 0.87%. So really, those are the two big ones. But you can see that right here in the middle. There's a lot of, again, back and forth. We had Aussie done well one day, but then did worse the other day. CAD, same thing, bouncing back and forth. So these numbers doesn't really do justice. Because when you start to look at those intraday charts, you'll see a lot more going on than those percentage changes. So I think as you look at this week, just take a look at the chart and those ranges because the percentage changes could be misleading. Now, taking a look at the crypto market, you can see Litecoin did the best, 8.25%, but you can see, but Bitcoin was slightly down. So not a whole lot happened in the crypto market. Crypto, again, Bitcoin seems to be stalled right at that 107, 108. So we haven't really seen, Bitcoin break out. Bitcoin is another great example where it's been range bound, which is, again, moving back and forth. Now, let's just jump into our market analysis, take a look at where we are, and then talk about what's the outlook here. Well, as you can see that, apart from that volatility, if you just take a look at the trend here, where are we? Are we going higher or are we going lower? So you can see that market has been going higher. We got some pullbacks, but eventually, it's like a gravity. It keep pulling it up. So the markets definitely are going higher. But it's a bumpy road. Market look a lot worse over here. But then again, right now market look a lot better here. But at the same time, realize that we got a resistance right here, and we got a support right here. There's a big range that we're dealing with. So eventually, once this volatility blows over, I won't be surprised that we get a big breakout to the upside. But until that happens, we want to keep the powder dry, and then don't get commit towards that direction, because that direction is not clear yet. The range is more clear at this point than, making a high and a higher low. But I won't be surprised that once this volatility or this tariffs kind of blows over, I think that will be a great time to see where the market's going to go. Now, when we take a look at outside of that, let's just go and take a look at this is again the bond yields, and you can see that bond yields are not really moving higher, significantly higher or lower here. I think the yields are kind of stuck in this little range here. Unlike what we saw in November and December, the bond market seems to be a lot quieter here. And here we are with the cryptos here. You can see that in the overall, we haven't really broken out of that December highs here. So until we get the big breakout, I think this crypto market likely to consolidate here as well. So going to next week, here's the schedule for next week. Again, there's, keep in mind is that over the weekend, depending on with the tariffs, if they go into effect, we'll probably see a dramatic open on Sunday. So this is, again, a great time not to hold position over the weekend because you don't know which way things going to go. But then, we'll find out where things goes starting Sunday or Monday. And then that probably, start off with either a big risk-off environment, or if things sort of calms down, then we'll probably see market sort of recover, rally. So this is, again, where things can go either way. So flexibility is really the key in these market conditions where, you have to be able to switch when the market is switching its sentiment. Now, going into the events, we have the U.S. Dow Jones job opening. So remember, next week is going to be employment report. So we have the U.S. employment report that will be coming out. So some of the economic numbers here, employment change. We only have one central bank on Thursday. This is going to be Bank of England. We don't have an expectation yet. But again, I think we'll see what happens. Right now, Bank of England is one of the highest as far as their the rates go, and we are seeing the pound kind of holding steady all week as well. So we'll find out which way it's going to go, and then based on that, I think the pound's going to react to it. Right now, we just don't have a clear idea on what the expectations are. So expect volatility, but then at the same time, take a look at these news events because these are going to be important ones as we get some employment data that's going to drive, the yields on the currencies, and then we'll probably see a bigger movement in currencies as well. So this week outlooks, I think markets volatility like to continue. Expect what we saw this week. We started off with the risk-off environment. We went into a risk-on environment. Now we're ending off with the risk-on environment. You can see that it was a big wave of back and forth. I expect the same thing going to next week. We probably see some, extreme environments where, we're leaning more heavily towards one side, and then we see some relief rallies. I think that's what we expect. In the middle of that, keep an eye on these news events if you're holding it through those or trading those events. So let's just jump into our currency analysis, start with the crypto and go into the currencies one by one. So here we are with the Bitcoin. Like I said, this thing is going sideways. So don't pay too much attention to the velocity today because those velocities won't make sense because things were pretty good. Then they got these nasty candles today just in the last 4 hours. So, we probably, velocity doesn't really do justice here, but, keep a close eye on where the trends are. So trends on the Bitcoin sideways. Here we are in Bitcoin Cash, definitely lower. It's a -2. Taking a look at Ethereum, you can see this is kind of sideways as well. And then here we are with Litecoin. It's sort of sideways as well. So until we really clear out some key ranges, which, you can draw some support or resistance level on the charts. And then, that gives you those key ranges. Until then, I think it's going to be trading back and forth between those areas. Now, let's just jump into currencies. Currencies definitely had a lot of back and forth in terms of trend scores. So looking at where we were with the dollar, you can see that we are kind of stuck in between that 20 and the 50-day moving average. So at this point, we closing right at the 20-day moving average, but I would still expect, I would still kind of give this more like a 0 because I just, we can see that things are trading in a range. So in this kind of environment, we can call it more like a range bound, the direction. Now, as far as the velocity scores, you can see that, a lot of back and forth. You can see like this candlestick was pretty bearish, going into the most part of this morning, and then here we are getting a massive bullish candle here. So, like I said, the velocity wouldn't really make a whole lot of sense here. Now, taking a look at trend scores on the yen, one thing I do want to point out, I know yen has been more like a volatile trade. Yen definitely is making higher highs and sort of, higher low. Here we are, we got this little pullback, and we just got a big rally, and we're gonna pull back here. So at this point, it seems like yen is better on those dips, just like how we were trading yen on the downside. So every rally we were selling, it seems like we're getting that opposite here. So the trend score is a +2. I definitely like the yen to the upside, but remember, yen is going to be that volatile play. So just trade that velocity, trade that, momentum, but then it's just not a one-way trade. We go up and then we come down. We go up, we come down. But in a direction where we're seeing higher highs and higher lows, we definitely want to be buyer on those pullbacks. Now, taking a look at the Swiss franc, again, let's take a look at it and forget about it. It's zero. It's, even though it's a -2, like it's a zero. This is a long range that we're dealing with. So until we get a break, significant break, lower or higher, don't really have no interest in trading this one. On the other hand, we have the euro that's kind of stalling here a little bit as well. So again, this goes back into another currency as a range bound. Now, here we are with the pound. Impressively enough, pound started off the month with a big negative note. I was seeing a nice big rally here. So the question is, where do we go from here? And if you look at the chart, they are holding steady. Despite of that market volatility, pound's not going anywhere. So I think pound's probably on the back burner until Thursday when we get the Bank of England rate statement and kind of move on from there. And then we have the Canadian dollar. As you can see that this thing is already kind of weakened going into this tariff. So we'll take a look at dollar CAD chart and see where would we expect to go. But again, I think a lot of that, dollar CAD is at 50, like about a 10-year high. So do I expect, that to continue? Again, if those tensions continues, we'll probably see the same pressure going on. But at the same time, I think a lot of that's already priced in here into these. So the overall trend on CAD again stays -2, but this again goes back to those, those currencies can really flip flop based on, if there's a development on tariffs, things get pushed. That's going to provide a big relief rally for the CAD. Now here we are with the Aussie and the Kiwi, and again, Aussie, I definitely started to like here, as we got above this 50 moving average, but because you can see that we just got knocked right down. So where are we? We are still in that range. We don't have a breakout yet. We are at the bottom of the range. So if the market does rally, if the sentiment gets better, I don't mind taking a look at Aussie long. I think this is again a range bound play here. It's not as directional. We are definitely in this, got a nice little 4 losing day, but you can see that we just stopped, we just bottomed right around that support area. So that's what we see in these range bound conditions. And then here we are with the Kiwi, and this thing is also staying range bound as well. So until I'm really getting a breakout, I just want to play these ranges. And there's, again, going to be good opportunities in between those ranges. So as far as the trend score goes, this is where we are. I really like the yen. Euro, we got the resistance, so we're in that range. But I am keeping a close eye on the yen here, especially if take a look at dollar yen. There's a lot of back and forth happening there. But if overall yen continues to recover off those pullbacks, I think that's the sort of indication that we want to play more yen to the upside. But when the momentum is not there, get out. When the momentum is there, jump back in. That's just a kind of a trade. How yen is. It's not a one-way trade where it just continues going higher and higher every single day. It's more like it goes up 2 days, come back, pull back 1 day, goes up 2 days, pull back 1 day. That's just a kind of continuity that you're seeing here. Dollar, it's back to a +1, but like I said, dollar is it's a currency that's going to be volatile. We have the CAD that's going to be volatile. And again, we're going to have Aussie and Kiwi continues to be volatile based on market volatility. So there's just going to be a lot shifting and changing based on market sentiment. So pay attention to the broader markets. Take a look at what the equity markets are doing. As I've said before, sign up for news alerts so you know what's going on when you see a big move. just come into the markets, checks for a factory, because then that gives you, you can see the news over there. But most likely when you see those drastic moves, it's just the headlines that's driving that movement here. Don't want to pay too much attention on the velocity. Like I said, velocity is not a great indication today. So let's just jump into the possible trades ahead and look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So looking into the setups here, let's just start with the broader markets. This is, again, markets are still live here. So you can see, you can see how quickly things turned lower today. And this is, again, 1 o'clock, right past 1 Eastern. So a big move here. We continue to sell off. So again, this is how, the market sentiment changes. We were sort of very nicely organically moving higher and higher. Markets were a lot bullish this morning as it continues to go higher, and then it just turns bearish. So this is why it's important to take a look at broader markets, because it's just telling you where the volatility is, what the broader markets are telling you. Now, when we take a look at the dollar, you can see that the dollar is kind of moving the same here. It was bullish here, then it's bearish, and then it's back to bullish again. So you can see that this thing is just chopping traders here. And this is something that, a lot of traders, especially if you're new and you're not aware of this kind of volatility, this is the kind of market where it's very easy to get chopped up, meaning that you try to go short, it goes against you, try to go long, it goes against you. It's just because that's the market environment that you're in, and if you are not comfortable with this trading the volatility, then it's better to stay on the sideline, maybe trade on the demo account so that you just get an idea how things work. But things definitely are moving very quickly. This is dollar CAD here, and you can see how you can see the range. Dollar CAD 150, 145, 40, all the way down to 143, 60. That's a big 120 pip range that you're dealing with. So this again makes it a little bit difficult. Even though if you go on a higher time frame, you're going to get candles where your stop losses are like 200 pip wide. So this is where I think you want to just trade the right markets, right conditions. I mean, right now it's not a great example because we expect this volatility, or we in this last hour of this volatility going into tomorrow. So things can change with the quick news. But once that blows over, I think we can then go back to looking at more trading more normal markets. Volatility doesn't stay elevated all the time. Things do change, and you want to change with that as well. So here we are. You can see that how things change quickly. This is an hourly chart. You can see that on the same chart. You can see both bullish and the bearish trends. You can see how this is where we get bullish, we went bearish, and then we went bullish again. So this is the kind of thing that you're dealing with. So these are the times where if there's not a whole lot of volatility, then sometimes it just makes sense to make a trade on a day-to-day basis because you don't know where the market's going to go the next day. Let me take a look at some of the other pairs like Aussie USD. This is again, I started to like this. It was trying to make a recovery here, but you can see that it got knocked down quite a bit as well. So I'm pretty clear on my outlook. I think when things are sort of going back and forth in a range, you're just trading the market environment. So when things start to look bullish or things start to recover, I think that's a decent trade at the bottom of the range. And as it recovers, then we can probably look at that a decent risk to reward and get out and just wait for the next level or next consolidation pattern to kind of go off of. But for now, I think just be on status quo. These are big ranges to deal with, and things will likely go back and forth. On daily charts, you can see, it will kind of slow things down, but at the same time, you're just dealing with bigger ranges at this point. So either you just let that market environment blows over and then just get in, or if you're trying to get in or bait trading the news, then just make sure you're using the right time frame and having stops in there. It's very important because you want to get out as soon as the momentum is over. That's you wanted to let the stop take you out, so you're not caught up in the wrong side of the trade. So this is where you probably have to be more proactive on changing your stops just to make sure you're locking in profits, because that position can really go back and forth very aggressively. So here's another one, dollar yen. That's another one I was watching. So I realized that right now you just want to focus on currencies that are actually moving. So despite of all the volatility, look at that dollar yen. It's actually making sort of a lower low here. But at the same time, you can see here, one day was pretty bearish, positive, 2 days bearish, one positive. So continuity is not really the essence here. So, you can get a good move on day-to-day basis, but that doesn't mean it was going to likely last into those multiple days. But again, until things settle down, I think there's decent opportunities. But make sure make sure your expectations are more realistic. And when things turn back to normal, let's just say here's the dollar here. Let's just say things kind of turn back to normal and dollar does turn around and breaks that down 50 moving average. Absolutely, that would be a great time to look for those longer trades. But until then, this is what we're dealing with. So we want to trade the market in front of us. So in conclusion, I think market volatility, the intraday volatility, likely to continue, and we're gonna adjust based on that. Risk on environment versus risk off environment. We're not married to any direction. We're gonna respond based on what we are seeing in the markets. Make sure you got your stops in place, so then you're out sooner than later. But definitely, a different approach here. As you're dealing with ranges rather than some big direction. Tariff, like I said, pay attention to the news. We'll see if it goes into effect tomorrow, and if it does, we'll probably see a bigger impact on the market open. And if things get resolved, let's say miraculously things get pushed or something, then we'll probably see a bit of a gap on Sunday as well. So these are the times where we can actually see a potential gap because you have a news risk on the weekend. So that's the game plan. Again, be safe out there. Volatility is great, but like I said, it works. It's a sword where it can really goes both ways. It really helps you. It can really hurt you. But the key is not to get chopped up in these markets. Use the right strategy, but if the strategy that you have doesn't fit that market condition, sit out. That 1-2 week out of the whole year, out of the next quarter, it's not going to make a big difference. Sometimes you look back and you realize oh, why did I have to be so brave? All I had to do was just avoid that volatility, and here I am, with a bigger loss, or I have to dig myself out of a hole. That happens, but market doesn't stay the same. If this is not your cup of tea, be on the sideline. When things start to go back to normal, come back to it. But that's what we're dealing with. So we'll keep everyone posted in our daily updates. Expect more of that volatility, and then we'll adjust based on those, those pivots that we see in the markets. Thanks everyone for joining. Have a good weekend. We'll see you the next week. Bye-bye.